Hello, class. I got problem 3 working here now. So problem 3 in the sample problems is in a little bit more of an accounting system format here that is meant to look a little bit more like what you might see in an actual accounting computer system, which is why it's in a slightly different format. So we have Laughter Landscaping, and they are looking at their 2018 journal entries and some subsequent entries related to those adjustments. So what we're going to be doing here is on this tab that comes up when we first walk in, we see we're on a general journal tab. So we can make journal entries on this tab, and we can record them. We can add them, edit them, or delete them on this general journal tab, and then they will show up on our financial statements on this other side here, okay? And so we have here some company information we can look at. Okay, Laughter Landscaping, a sole proprietorship that earns revenues through services. We have a chart of accounts, which tells us the account numbers, names, and account types in our chart of accounts. And then we have this general journal tab where we can actually make journal entries. All right. So they have what we're going to need to do is make some journal entries on here. And we've got different time periods here too. So if we click here, it takes us to, so right now we're in a quarter, which is December, January, and February in this time period. And then if we flip forward to the next time period, we have March 1st through May 31st. Okay. So we don't need to do anything in that time period. We're just going to hopefully be recording things in here. But to get started, it says using the General Journal tab, click Add Transaction to journalize each adjustment for 12/31, and then click Post once you complete the entry. And then when we post those, that will make them appear on this reports area. That means it will push it out to our financial statements, like saving it in an official capacity. All right. So I'm going to go ahead and I'm going to click Add Transaction, and it's going to say, hey, what do you want to enter? Well, looking at our first entry here, we've got each Friday, Laughter pays employees for the current week's work. This amount of the weekly payroll is $8,000 for a 5-day work week. This year, December 31st falls on a Tuesday. Laughter will pay its employees on January 3rd. So what this means is that as of Friday, the previous work week, we had $8,000 for payroll that we owed. And it's going to pay its employees on a January 3rd, actually. So looking at December 31st, we have a Tuesday. And let's see, they pay the employees on Friday for the current week's work. Okay, sorry. So looking at that here, I'm just going to draw this out so we can conceptualize this, right? Tuesday, Wednesday, Thursday, Friday. All right, sorry. So we get paid, paid on Friday for Monday through Friday. All right. Now, Tuesday is going to be the last day of our month, right? So Tuesday is December 31st. That means that if they got paid the previous Friday for the previous week's work, as of December 31st, we have employees that worked on Monday and Tuesday that we need to record for the month end at December 31st. And those people have not been paid yet. They won't get paid until Friday. All right. Now, if we have $8,000 worth of pay for this entire time period here, that means that roughly 1/5 of that would be for each day. All right. So $8,000 for multiple people, right? We've got, does not say how many employees, but so 8,000 divided by 5 days is $1,600 per day, right? So that is how much we have expense per day here. And then on Friday, they are paying for Monday through Friday, which is the full $8,000. Okay. But in the meantime, we've got these 2 days where people have worked for 2 days and they have not yet gotten paid. All right. So that means we're going to have $3,200 that we owe on 12/31. Okay, so what we're going to need to do is record the expense for those 2 days, as well as accruing the liability for the salary payable. All right, so looking in here, we're going to scroll down until we find, because we record our debits first, so we're going to scroll down until we find our salaries expense account here, which is going to get debited for $3,200. And then we are going to be crediting our liability for salaries payable for that same amount. All right, so now that we've got that entry, we're going to go ahead and post that to our journal entry. I clicked post and it shows that it's green now, right? So if I go to reports now, I'm going to see that I have a transaction list here on this transactions by date. That's the transaction we just recorded. And if I go to my general ledger, it's showing, so they had beginning balances that were flowing in or activity during this period besides what we entered, okay? But if I scroll down to salaries payable, I will see that we started out with a 0 balance and then we credited that for $3,200. So that's showing up there. And if I scroll down to my salaries expense for the month, we show that $3,200 there. All right, so going back to our business tab here, the next transaction that we need to record is going to be on January 1st of the current year. Laughter purchased an insurance policy that covers 2 years, $8,000. Oh, shoot, let's see. Did I record the wrong date on there? I did. So I'm going to scroll, I'm going to click on that, and I'm going to click Edit Checks Transaction, and I'm going to fix that date to be December 31st there and repost that. Okay, so now if I go back here, I've got the correct date on here. All right, now though, I'm going to add my next transaction. So my next transaction is going to be, let's see, on January 1st of the current year, so 2018, we purchased an insurance policy that covers 2 years for $8,000. So on the first of the year, we recorded, so on 1/1/18, we purchased that prepaid insurance for 2 years, okay? So what that means is as of December 31st today, we have now used up 1 year of that insurance, all right? So we need to expense that under our insurance expense. And if we paid $8,000 for 2 years, that means that that's $4,000 for 1 year. So 8,000 divided by 2 is $4,000 per year, right? So I'm going to debit that for $4,000. Okay. And then I had recorded that when I purchased that, I would have recorded a debit to our prepaid insurance asset account. So now I need to reduce that $8,000 asset down to $4,000 by crediting it. So I'm going to find my prepaid insurance account to be credited there. So as of today, I'm showing that I have used up $4,000, expensing $4,000 and reducing the asset by crediting it for $4,000. So that is my next entry there. So now if I go over to my transaction list, I've got my second adjusting entry there. And if I scroll over here and I scroll down, I will see, okay, I started out with $8,000 debit balance in there. I credited it for $4,000 and now I have a $4,000 ending balance. That makes sense to me. And then if I look at my insurance expense, I am recording $4,000 for that. All right, so the third entry I need to make is that the beginning balance of office supplies was $4,300. So we started the year with 4,300, or the period, whether it's the month or the year. During the year, Laughter purchased office supplies for $5,600, and at December 31st, the office supplies on hand total was only $1,500. So we currently show, if we go out here to our office supplies on our general ledger, let's see here, $9,900 sitting in here. So beginning of the year, we had 4,300. We purchased 5,600 to arrive at 9,900. So currently we have 9,900 in there. It should be an actual ending balance that we had on hand of 1,500. So the adjustment is going to be the difference between the two. So 9,900 minus 1,500, or 8,400. All right. So we're going to go back to business here. We're going to record by adding transaction. And so what we're going to do here is we're going to expense this 8,400 that we used up during the year. So we're going to debit our office supplies expense, or supplies expense. There we go, for that 8,400. And then we are going to credit our office supplies for that same amount. Okay, so I'm going to go ahead and post that entry. And let's see here. So we've got that. Going out here, we now show our 3 entries that we've got here. And for general ledger, if I scroll down now to my office supplies, I show the ending balance of 1,500, which is what we want. And then if I scroll down to office supplies or supplies expense, I see here that we have recorded the 8,400 here. Okay. All right. Now, the next thing it says that we should be doing here is what they want us to record subsequent entries that are related to these adjustments. Okay, so one thing though that we missed here is that if I scroll down, there's actually a bunch more entries. So not just 3 entries, there's some more we got to do here. So I'm going to go ahead and I'm just going to open up a new tab here. So I've got a nice clean sheet in case we want to do any more muddling around. But okay, so we did our office supplies adjustment. So now we got to scroll down to additional adjustments that we've got to make here, because the subsequent ones that they're talking about are actually on this list if we scroll down. Okay, so continuing on with our next entry here, we're going to add another transaction. It says, during December, Laughter designed a landscape plan for Carly Enterprises, which prepaid $6,500. Laughter recorded this amount as unearned revenue. So we have unearned revenue sitting out there of $6,500. Okay, now the job will be complete in February, but we estimate that we've earned 40% of that revenue as of December 31st. So 40% earned. So we're going to take 0.4 and multiply it times 6,500. And that's the amount earned in December. Okay, so then what we need to do is we need to relieve part of that liability. So this would be sitting out there with a credit balance. So to relieve it for this amount of 2,600, we would debit that. And we always put our debit first. So we're going to record then $2,600 that is going to be removed out of unearned revenue, and then it's going to be credited into our service revenue account. All right, so we're going to go ahead and post that. And then our next entry, Laughter earned $3,000 for landscape services completed, and they will pay in January. So we have a receivable that we need to record here. So we're going to debit our account receivable for that $3,000 that they owe us. And then we're going to record service revenue for that $3,000. And again, that's at 12/31. All right, so the next thing we're going to do here, we need to record our depreciation for that period. So depreciation, remember, is how we take a slice of our long-term asset that we've used up during the year, and we record an expense. And then we also record that contra asset account for accumulated depreciation, which offsets the value of our asset that we have sitting out there to show that we've used part of it up, but it allows us to keep the balance sitting out there in the asset account. So we're going to go ahead and please go watch the MyLab video on depreciation if you don't understand what I just said there. Okay, so recording the depreciation. We've got equipment 3,000 and trucks 2,200. So scrolling down to our equipment expense, depreciation equipment, we've got 3,000 for that. And then depreciation trucks expense, we have got 2,200 here. All right. And then we need to add a row here. And then actually we're going to add 2 rows because we need to put accumulated depreciation, that contra asset, for the 3,000. And we need to do accumulated depreciation trucks for the 2,200. So each type of depreciation has its own expense account and accumulated depreciation account that offsets it. All right, so this is what's called a compound entry because it's hitting more than 2 lines. So we've got that recorded then. The next entry, Laughter has incurred $250 worth of interest expense on a $550 interest payment due on January 15th. So half of a month of interest, like say we're paying this monthly on December 15th and January 15th, our loan payment, we are going to record the amount of accrued interest that we had as of the end of the year. So we're going to record interest expense for the $250 worth of interest that we incurred. And then we are going to credit interest payable for that same 250, which is a liability, to show that we owed that as of December 31st. And then we're going to go ahead and post that. All right, so that looks like it's our last 12/31 entry, but we've got some additional entries that we need to record in January and February here. So just a couple more entries. So the first thing we're going to do is, if you remember from way back here, oops, and I deleted it, but we had that payroll where we pay $8,000, of which 1/5 is earned by the employees each day. And we recorded 3,200 in expense already for this week that ended on Tuesday was December 31st, and then Friday, which is payday, is going to be January 3rd. All right, so that's our payday that we have to pay, $8,000. Now, so we're going to add an entry here. Normally, if we didn't have an accrual here, we would just debit salaries expense for $8,000 and credit cash, right? However, we already recorded part of this, so we need to debit salaries expense for the remaining part of our expense here. 3 days worth of expense. If I highlight that, it shows that sum is 4,800. So So the remaining 3 days has to be expense. And then this is the liability that we need to relieve when we pay, when we make this payment. So we don't want to record this part as expense again, because then it gets expensed twice. So for salaries expense, we're going to have 4,800. And then the remaining 3,200 that we're paying is going to come out of that, is going to debit that liability that we recorded for salaries payable there. All right. And then we need to add one more row here. So we're debiting salaries expense, we're debiting salaries payable for the part we already recorded, and then we are going to credit cash for the $8,000. Okay. So I'm going to go ahead and post that. And so we've got that out there. Now our next entry here, scrolling down, we're collecting $3,000 from Turkey Appliances. Oh, and I put the wrong date on this entry. Hold on, hold the phone. I'm going to click on this and I'm going to edit that and put the correct date. That should be January 3rd, actually. There we go. So corrected now. All right, there we go. So now if I go out here and I look, I've got that on the correct date. All right. Okay, so now we're going to add a transaction. We're collecting $3,000 from Turkey Appliances for that work that was completed, and that is on January 10th. So let's go ahead and put that. So we are going to debit cash for the amount that we received, which is $3,000. And then we are going to credit our accounts receivable. Okay, so we recorded a receivable when we performed that work, and we are now collecting on it. So I'm going to go ahead and post that. So if I go out here and I look at my general ledger here, see here's where we recorded the receivable, and then here's where we received the payment, and that cash payment was up here. Okay, so we've got that entry recorded. Now we are going to, let's see, we got 2 more entries here. Next, we're going to pay our $550 interest payment. So before we do that, let's go back out and look at our interest payable account here. So if we go down to interest payable, we've got a $250 payable sitting out here that we recorded. So we need to make sure that we relieve that liability when we pay this, okay? So we're going to add transaction, and we are going to debit that interest payable account for the $250 that was already recorded on 12/31. And then the remaining $300, so $550 minus the $250, is going to get expensed to interest expense. All right, so, and then we're going to add a row here to show the cash part of this. So we're crediting cash because we are paying $550. So of that $550, $250 was expense we recorded in December already, and $300 is the amount that fell in January. And then the date here, I want to update that date to be the 15th, because that's the date that we're actually paying it on. So I'm going to go ahead and post that. And then for our last entry here, completed landscaping project for Carly Enterprises who had paid in advance. Okay, so if I go out here, by the way, and go to general ledger, we had that unearned revenue, right? So they originally paid us $6,500. In December, we completed 2,600 of that. So then we had 3,900 left, right? So if we scroll back up here, that was this. So what we're doing is a follow-up to this entry from 12/31, right? Okay, so 6,500 minus the 40% that we already did, right? So leaves us with 3,900. So we're going to go ahead and record a transaction for that. And that's going to be recorded on 2/28. Okay, so we're going to debit unearned revenue, that liability, to reduce that down to zero. So we had 3,900 left on that. We're going to debit that for 3,900. And then that's going to be credited to service revenue. All right. So go ahead and post that. And then we're going to go ahead and click submit work. And looks like we expected 11 transactions. We had 11 transactions correct, so we are good to go. And then now if we go out here and look at our general ledger, all of those items have been posted out to these accounts. So that is problem number 3. I'm going to go ahead and stop this video and just have this one problem on here, and then I'll do a separate video for the last 2 problems.